Metaplanet says it's buying, 1,000 Bitcoin, and I expect the number of companies buying Bitcoin to at least double or triple, right? It's a trend. People tend to follow that trend. So I agree that those may be, on the low side. What I like about it though, is you can sort of interrogate each one and say that checks out and this checks out. And we're not even talking about governments. We're not even talking about other things. And if you just add them together, there's too much demand, not enough supply. That's why everyone seems to be aggregating around this $250,000 range.
Hougan begins by highlighting a significant cultural shift on Wall Street. Traditionally, financial institutions avoid bold predictions about asset classes, with forecasts for equity markets typically ranging around 6 to 7% annual growth. However, Wall Street's willingness to predict Bitcoin doubling in value represents a paradigm shift. Hougan predicts an explosion in ETF inflows, with Bitcoin ETF investments projected to grow from $35 billion to $70 billion, and Ethereum ETF from $25 billion to $50 billion. Such massive inflows would likely push Bitcoin prices to $200,000, which he considers a conservative estimate.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Yeah, well, I still think there's this risk that if you say what you really think, you'll come across as crazy. So we should be happy enough that Wall Street is willing to say an asset will double. Assets don't double in traditional finance. That's not a prediction you make. You're like, maybe the S&P will go up 6 or 7%. No one says it's going to double. So for them to say double, we should give them their flowers for going out there. But yeah, we're starting to see these much bigger numbers, $1 billion a day. And I think that's going to continue, right? There's a lot of money in motion at the beginning of the year. That's why you're starting to see it pick up. You're seeing people who invested previously at 1% go to 5%. As you mentioned, Scott, we did a survey. We're going to publish it, I think next week, of financial advisor attitudes towards crypto. 99% of the people who had crypto last year plan to increase or maintain their exposure in 2025. I mean, these are unheard of numbers, right? So you're going to have the people who invested last year investing more, and then a new cohort of people investing for the first time. I think we're going to blow 2024's flows out of the water, and it's be a persistent bid behind.
I think 100.
They expect ETF inflows to go to $70 billion from 35. And two is that they expect corporations to buy $50 billion of Bitcoin, not 25, which they did last year. So they expect both of those trends to double. I agree with both of those sort of sub predictions. And if those things happen, it's hard to see the price not getting to 200,000. In fact, 200,000 may be on the pessimistic side. I think it could go even higher than that if we see both of those things. Metaplanet says it's buying, 1,000 Bitcoin, and I expect the number of companies buying Bitcoin to at least double or triple, right? It's a trend. People tend to follow that trend. So I agree that those may be, on the low side. What I like about it though, is you can sort of interrogate each one and say that checks out and this checks out. And we're not even talking about governments. We're not even talking about other things. And if you just add them together, there's, too much demand, not enough supply. That's why everyone seems to be aggregating around this $250,000 range. I think the nation state theory is not priced in at any degree. If we actually see that happen, I think we're ripping right through these predictions in real time. There's just, Bitcoin is still so small. Yeah. Andrew was mentioning these institutions having $200 trillion of assets. Even like dipping your toe in the water blows this thing out of proportion. We're only printing 169,000 Bitcoin a year. There's just not enough Bitcoin. So I think that nation state theory, if it comes into play, that's not in the market at all right now. The market is skeptical of that, and they may be wrong. I mean, look, from an institutional perspective, Ethereum is easy to understand because it's more useful. You and I have discussed this, Scott. It sits at the center of three of the biggest themes that are happening in crypto right now, which is the growth of stablecoins, tokenization, and AI agents. All of that is happening in the Ethereum ecosystem primarily. I think when you combine those two and you look at the growth that's going on in base, there's going to be billions of inflows into these ETFs. There's going to be broad institutional support. When the Ethereum ETFs were struggling, I said, I think on this show, they're going to wake up at some point next year. It's going to have $20–30 billion in assets in them. I still think that's going to be the case. I think it's the contrarian crypto bet for 2025. I think it's going to do exceptionally well.
Yeah, let's see 35 into Ethereum. There, right? 100 into Bitcoin, 35 into Ethereum.
Now you're talking. I mean, we say that in jest, but you have to remember, I think that's real. As professional investors allocate, they also have a discipline of owning the market. They're not going to just own Bitcoin. They're going to go own Bitcoin and Ethereum. And when we get a Solana ETF, they're going to add a little bit of that, right? They're going to build these diversified portfolios of ETFs. And there's just going to be persistent flow into all of these products for years to come. I think it might already be happening. There's 70 publicly traded companies that own Bitcoin, at least a little bit. It's not just MicroStrategy, it's 70. And I think that'll be 200. I think you're right. We'll have the Long Island blockchains of the world. Of course, you're going to see all of that. I think there'll be pressure even on large cap companies to add it onto their balance sheets because they're being rewarded in this environment and the downside is relatively low. And again, they're already big companies. Block owns Bitcoin, right? Tesla owns Bitcoin. SpaceX owns Bitcoin. It's not just MicroStrategy and Marathon. It's a real growing list. And again, I go back to this point that Bitcoin is so small. I had this argument last year with somebody who thought corporations buying Bitcoin won't matter. But MicroStrategy alone bought more than all the Bitcoin mined last year, right? And they'll do it again this year. And then so will Metaplanet and so will someone else. The market is just so tight and so small that these trends don't have to be very big to overwhelm the supply and demand dynamic.
Hougan critiques the regulatory environment that has previously stifled innovation in crypto products, such as ETF with premiums and discounts, or stablecoins that cannot pay interest. However, he anticipates a wave of new products that will better serve investors, including those offering staking and in-kind creations. This evolution is expected to accelerate inflows into Ethereum and Solana, as well as other high-yield staking assets. Hougan underscores the importance of these developments in creating a more mature and accessible crypto investment ecosystem.
Look, I'm happy if anyone buys any of it. So yes, you have people who do that, who think it's more capital efficient. I think that's great, right? We're fans of MicroStrategy. It's the largest holding in our equity ETF. We're big fans of the company. That's great. Different people want different things. Some people want that leverage exposure. Some people don't want the variability in the premium. I understand both perspectives. The ETF is just there if people want something that's super simple and super low cost. If they want something more complex, great. And you're going to see Bitwise and others offer all these different flavors. I'm agnostic as long as people understand what they're buying. Great.
Wait, you guys had some news this week, didn't you, about products that you're looking to potentially offer or that you're launching, right? I mean, it's about to get really fun.
Yeah, I mean, we filed for some products. I can't speak more beyond what's in the filing, but there's the Bitcoin standard filing, which will hold companies that invest in Bitcoin. And we expect to see many more, right? I do think the filing space will get very exciting. I think you'll see some totally goofy, ridiculous, and terrible ideas, and hopefully some very good ideas as well. But it's fun. We've had this weird world over the last, 10 years where regulators have created structures that made products worse for investors, right? They created structures that forced us to have GBTC and its peers with premiums and discounts. They created structures so that stablecoins couldn't pay interest to end investors. And they forced TTPs not to have staking or in-kind creations, making them less efficient. Hopefully all of those peel back. And of course, that's going to accelerate inflows, particularly into things like ETH. And as we get into Solana and others with really high staking yields where it's really important, it's just going to make those what they should be, which is the fundamental beta of the space, the starting point where you do at least this, and then some portion of people will do things beyond that. And if we get those early in the year, yeah, these AllianceBernstein predictions for flows are going to have to be upgraded to the kind of numbers you were throwing out, Scott. Yeah, we covered a bunch of it. Look, I said this on Twitter yesterday. I think it's an all season. I do think there's going to be a rising tide that lifts a lot of boats here. I think you're going to see people allocate into indexes and allocate broadly, as Tillman has been discussing. So I'm really bullish, really excited.
I think retail's been left behind. I think the price action and the price, I think in a lot of retail mind, they're still chasing the gains. Bitcoin serves a purpose for the world this bull run that it's never served before, which is a hedge against inflation. And that doesn't really appeal. That's not a narrative that really retail buys into. Retail's about making money. Corporations are about hedging against their risk. It's about managing the risk as much as anything. So if you have all of your assets that are being priced in dollars, you've got, and if you hold a lot of dollars, there's got to be a hedging strategy that you start to incorporate, or at least that you start to look at incorporating into your company, into your country, whatever. Those larger institutions are looking for easy ways to leverage their share price. And if you add a little Bitcoin to any publicly traded ledger, you are getting a multiplier effect in the upside potential that you have without really risking anything. I think the number that I've heard most from the biggest institutions are put 1 or 2% into Bitcoin. Well, I mean, what happens if it goes down by 50%? Who cares? It's a rounding error for them. But what happens if it goes up to 250,000, 350,000? It's an incredible lopsided upside to downside ratio as far as I'm concerned, especially if you have a great deal of wealth that you're trying to manage and reduce your risk against inflationary powers. So that's the way I would look at it.
Hougan reiterates Bitcoin's unique appeal as a deflationary scarce asset that serves as a hedge against inflation. For large institutions managing trillions in assets, even small allocations to Bitcoin can have outsized impacts on portfolio performance. Moreover, as more corporations and institutions incorporate Bitcoin into their strategies, the cascading effect of growing demand and limited supply will amplify Bitcoin's value proposition.